now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show where we think, act, and prosper. We have a returning guest. It has been a while, but we are with the Silver Guru, Dave Morgan. How you doing today?
Doing well, Daryl. Thank you.
What's your assessment of like this chaos that's happening? It's a big shakeup, So I want to kind of get your overall assessment on how you're processing all of this.
Well, you outlined it pretty well, Daryl. I mean, I can add a few things. One is that the overall global macro picture is the economy on a global scale is contracting. And for a debt-based monetary system, you have to have continual growth. You've got to continue to grow the economy. And of course, we saw China do a phenomenal amount of growth from roughly year 2000 up until recently, we'll say. But overall, but we've grown too fast, you might say. And so now we're seeing contraction. We're seeing it in, across the board, basically. I mean, even in the foodstuffs, which, you usually want to grow more food than you need. You got a surplus, you can store it, or prices come down or whatever. So you look at like the restaurant industry in the United States, so many corporate restaurants have been closed totally, and many are just shuffling off the projects or the properties that are not making a profit, like an Applebee's or a lot of the chain restaurants in the fast food industry, Hardee's, even some such as In-N-Out, which you're probably not familiar with. You maybe depends where you live.
Yeah.
In-N-Out is a fast food hamburger, very, very minimalist menu. They serve hamburgers, cheeseburgers, fries, shakes, and drinks. That's it. Very, very profitable. It's not a public company. It's privately held, but they never froze their meat. Anyway, this thing is a moneymaker no matter what. Well, they actually closed the store due to theft being so high in the parking lot that they just closed the store down. So it wasn't that they weren't profitable, it's that the customer base has changed so much that they took the precaution of closing down the store, so they're, for safety reasons. So I'm off a bit on a tangent, but this is let me add on to that as there's more uncertainty and people start to be more and more concerned about their money, and not only is it deteriorating in purchasing power, but are they going to have enough? Are they going to have enough now, or are they going to have enough in the future if they're going to retire? And this puts tons of stress on people. And then you see people do what maybe not be morally correct, but they'll do. I mean, if you got to eat, you're going to find a way to eat. And I'm not justifying crime or anything like that. And it's a mess, and it's a trend, and the trend is accelerating. And these things have concerned me a great deal, Daryl. When I started the website, I thought, the problem that I see ahead is pretty much where we're at right now. But what really scared me wasn't that I saw the issue and it was pretty much not easy to determine as far as how many years away would it be, but that was global in nature, because we've never had a system that was where one currency, the US dollar, was pervasive worldwide. So if the dollar goes down, basically everything goes down. It happened before in hyperinflationary environments, as we all know, Zimbabwe, Argentina, every 10 years or so, the Weimar Republic. But this time, the whole world is at stake. And with this tariff, it was like a shot across the bow. I mean, it was a wake-up call for everybody saying, you know what, it does affect everyone and everything.
Mm-hmm. Yeah, yeah. So that you mentioned quite a few things in there, but overall, this global contraction and even bringing that back to the United States. I mean, many folks and they pride themselves on their retirement accounts. Those those are drastically impacted, um, and and we're also seeing how I mean, we obviously have like the wealth gap and things of that nature, which is very prevalent issue. But it seems like there's a big mindset shift in terms of like how can I protect my wealth? And we've seen bonds and government instruments like sell off significantly. People are dumping those. We see gold at all-time highs. and it um, continues to go higher in measured in dollars. And so, how are you viewing that? Like the selling of U.S. debt, the reduction of people buying and piling into bonds and treasuries, and gold being at a all-time high measured in dollars.
Yeah, let's do a bit of a review. This is fairly basic, but the fundamentals always have to be practiced, right? I mean, the best football team in the Super Bowl still does the fundamentals every practice. So bonds and stocks are negatively correlated, or used to be. So if you were in the equity market in stocks and things started to look bad, you would move into bonds. So there's usually a 40-60 relationship, and that works for years. So if you're very aggressive and you're young, you could have 60% equities, 40% bonds. And when you get to your golden years, you might reverse that and have 60% bonds, 40% equities, because it's safer. The problem is, going back about 20 years, perhaps a little longer, 25. A friend of mine from BMG in Canada did a paid for study without the outcome. It wasn't an internal study where you're biased, paid an external, and had them look at a portfolio analysis and relationships in different market sectors: stocks, bonds, commodities, and particularly precious metals. And what we found was that there is no negative, or very little negative correlation with stocks and bonds. So if you're in stocks and you're going to go into bonds to protect yourself, good luck. It's not going to work. The only thing that works for both is gold. Gold is the most negatively correlated asset to the stock market, not gold stocks, but gold. So if you wanted a balanced portfolio, what do you do? And according to the study, it's called Ibbotson and Associates. You can look it up. The study was done probably about 25 years ago. And in that study, they said under all market conditions, you wanted to have 15% gold. That would be your holding. And then it also talked about, if you had very recessionary type of a situation, you might go higher than that. What's interesting about that, Daryl, is there's a study done by CPM Group in New York, and it's run by Jeffrey Christian. And he does a study from 1968 on. And I'm going to digress for just a moment. But if you ever do a trading algorithm that you buy, go to these investment conferences, you buy the software to help you trade. And some of them are pretty good, but they're set up so that data that's nearer term is weighted higher than data that was longer term. So if a certain stock is moving up 2% every week the last 3 weeks, that's more important to know than what it did a year ago. It might be good to know a year ago, it did, but that's the point. So from 1968 on is more important than the Ibbotson study, because it's fresh data. In that study, 25% was the amount of gold that you would want to hold in a portfolio. And that's more than I've ever really said publicly, Daryl. I've said, 10%, 20 at the most, kind of a thing. Not that there's a perfect number for everybody. Again, I like silver. Silver's not performing as well as gold, but it's acting strong here. But gold is definitely outperforming silver. And in my methodology, how to use the mortgage report. When you become a member, the first thing you're supposed to do is read how to use the mortgage report. You have questions, you get a hold of me. I say in there, the older you are, the more you should favor gold over silver. Same as what I said about stocks and bonds. So maybe I overkilled it there, Daryl, but it concerns me that the escape mechanism. Well, let me finish with this, because this is the most important part. Up until very recently, the market still believed there was a correlation of safety going to bonds. It's no longer true. And the reason we know that is, even though people are moving into bonds, bonds are going up in price, not down, which means the value of the bond is getting lower and lower and lower. And you would expect, if there was fear that would protect you going to bonds, the opposite would be true. So the market's starting to act on its own. Even though the Federal Reserve can set the discount rate, they cannot really control the bond market. They try, they can control it somewhat with Operation Twist and QE and buying the long end and all the things that they can do. But those are Band-Aids in a will. in a way. The market, when it gets this disrupted, and the yen carry trade is being disrupted in Japan, and somebody in the high towers of the Japanese banking system is worried about what's going on with the yen, and they start to really dump on the treasury market. Those are things that even the Federal Reserve can't do much about.
Yeah, yeah, that's pretty alarming. So, so the 60/40, I mean, I've heard from multiple people that combination is pretty much over. Like, people are dumping these bonds, other nations are dumping these bonds, especially with, um, the relations with United States and such. And so, I mean, we have people dumping their debt. Then we also have, the Fed. I mean, they kind of tapered their quantitative tightening. Many people are expecting them to start easing again this year. And in relation to gold, I mean, gold is running up significantly off of I think it's probably more off of the chaos. I mean, gold is pretty much a hedge against chaos, and people are running there, flocking there. But we still have like a Federal Reserve that at some point may have to turn on these money printers again, and to start easing and printing money. And do you have any view there? Because I feel like that's another tailwind for gold to even go higher if the Fed starts easing again.
Well, two things. One, you hit the nail on the head. Look, gold is usually in the mainstream press talked about as an inflation hedge. Gold actually does better in a deflation. That's actually provable by a book called The Golden Constant, but I won't elaborate. But no, I think you said it, because if they start to print more, gold's going to go even higher. Not because necessarily an inflation hedge, although that's what you'll hear in the mainstream financial press, and that's partially true. It's one uncertainty, and it's what the destruction of the currency. And the biggest point, I don't think I made it quite as strong as I wanted to, and you said it a moment ago, is there's an asset shift. And the asset shift isn't stocks to bonds. The asset shift is stocks to gold, bonds to gold. That is a new paradigm. That is what I've been predicting for so many years. And in my view, it started a few years back when no one saw it. It was the stealth mode of the new bull market. Who was buying gold hand over fist while the economy was good and stocks were making all-time highs? The bullion banks and the central banks, they're buying gold like crazy. They set a record for buying gold for 2 years in a row. And no one was paying much attention unless you're some stupid gold bug, But gold bug or not, that's what was taking place. So the banks saw what was coming. And now it's kind of like the cat's out of the bag. Everyone's kind of seen it with this tariff situation. Wait a minute, what is safe? And really, we've got thousands a year track record. If you want safety, it's not a currency. It's not a debt instrument. It's money of last resort. That's gold.
hmm So where we are in the, I guess, market cycle, or however we want to frame it, do you think that, I mean, the miners have moved um somewhat. I mean, I mean, I guess some of the ETFs have been gaining significant traction, but we're not seeing that in proportion to like how much the physical metal has moved. And so, how are you looking at that relation with the miners and the physical metal?
Well, a couple of things. One is that I put up something on my Twitter feed yesterday or day before that year to date, gold is up like 17% and the mining index is up 37%. So the mining index is finally outperforming gold. The rule of thumb is about a 3-to-1. So if you get a 10% move in gold, you get a 30% move in the gold stocks. I look at it as an opportunity. I think we're just starting now where we're not the smart money's in gold, which moved in, as I said, 2 years ago and continues to add to their gold positions. But you're starting to see some of the public. Well, where's the public? The public usually kind of gets the deer in the headlights. They don't know what to do. They've heard over and over again, just hold on, because if you hold long enough, it always comes back. But the pension funds, the managed money, the family offices, those type of entities that are really more involved at a professional level at the markets, they are starting to get worried, and they're starting to make their moves into the precious metals, into gold in particular. So I think that's the shift that we're going to see accelerate. Now, it will happen for the public at some point where people will say, you know what, I've got to cash out of my IRA early, or part of my IRA, I've got this, name it. There's a variety of reasons. Some bill, lost a job, uh, moving, illness. I mean, there's a lot of reasons, but a lot of that money may not move its effort from an IRA, but it'll transfer from an equity bond account and go into a IRA that's gold based. Actually, it always surprises me, but I'm a market student, have been for years. But of course, my specialty is the resource sector, gold and silver in particular. But so many people don't know that they could have gold in their IRA, which is rather astounding, because if you go back to the studies I mentioned a moment ago, both of those studies say if you want to make the most safely in the long term, you've got to have gold in your portfolio. It doesn't have to be all gold, shouldn't be all gold, but it should have some gold. And this is what some of my clients, are saying, kind of a thank you, not to me, really. It's the message, not the messenger, but the message is, here are the facts. You make your own decision. And a lot of people made the decision. And my own sister, I called her, and she's getting hammered in the stock market. So at least you got your gold. And she goes, oh, no, I sold it too early. I said, I didn't know that. Her own brother, she didn't tell me. So anyway, back to you, Daryl.
Wow. Yeah, that's funny. All right, so you mentioned the miners, and so one of the things I was kind of wondering about is the last few years the miners have had some pressure on them. I mean, the price of oil was higher. You had inflationary costs and things of that nature, which can hurt their like profit margins. But you do have the yellow metal just continuing to soar. And I was kind of wondering about, I mean, the price of oil has come down significantly in the last few weeks, and then but then we have kind of this tariffs situation, and I know that when um, I think gold was excluded from the tariffs, but you do have all of these minerals and other things that factor into mining. And so I was kind of wondering, is should we be concerned of any of those types of impacts on the miners?
Yes, we should. This will be hearsay, but I was one of the first. In fact, I believe I was the first in the financial newsletter business focusing on resources to bring about the rare earth element idea as an investment opportunity. So we started writing about rare earth elements, and then many followed, brought it up, and there was lots of money to be made in the rare earth elements, and we did pretty well in that sector. Well, in that process, I actually met a gentleman, I'll leave him anonymous because he wants to be, that really is one of the bigger players, not as far as financial, although he's quite involved, but as far as knowledge and a relationship between China and the United States, as far as procuring, securing, and delivering the real metals, the rare earths, into the United States. Ironically, I just spoke with him the beginning of this week, and this is when the tariff thing just started. So bottom line is China is not taking this lightly, as we all know. And there's a possibility, I don't want to say probability, I'll say possibility, that the rare earths could be cut off quickly. And if that were to occur, not only would it damage, there's no mining backup really in the North America. I mean, there's some rare earths. I mean, one of our stocks is uranium stock, and they do get some rare earths from the same mine that they're getting the uranium from. But there's not enough produced in North America to cover what we have to import. So that would affect the mining industry for people out looking for rare earths. But you can't turn a switch on in the mining business. It's a very cumbersome, very capital intensive business. It takes a lot of time. So that's number one. On just looking at the gold side of it, then yes, you've got the huge margins in gold. The stocks are value stocks at this point. Their profit margins keep going up almost daily because gold prices go up. Oil's in their favor right now. And so I think as this shift that's beginning where gold is now looking at as a safe haven, the stocks, the gold miners will start to be looked at as a value investment for portfolio managers, and they'll start to gain traction, and you'll start to see more and more movement into the top tier, cash rich, unhedged gold and royalty companies. And there's several out there. 3 of our top tier, we only have 6 in the top tier, were recently making new highs, and that's when very few people are even aware that anything about gold or gold mining. I should say gold, but gold mining. So it is a place. So we're going to see problems in the rare earth sector. We're going to see problems, perhaps, with these tariffs that a country such as, say, Mexico, that's the number 1 silver producer, starts to look at, what's going on with the tariff situation. It is in flux. It's on, it's off, it's this much, no, it's more than that, no, it's less than that, and on it goes. So you know what? We produce more silver than anyone else in the world, and we export it based on a derivatives market. We don't want to do that anymore. We're going to put our own tariff on it. We're going to put a value added on it. We're going to ship it anywhere for 20% additional. Why? We need the money. We need to feed our people. Whatever. I'm not saying it would happen, but it could happen, because this tariff war is really that. It's without bullets, but it's a way to really disrupt the markets, because now the marketplace itself doesn't determine what the true price is of anything. There's no price response based upon how much demand there is. It's a price response based upon, well, I think it's worth this much and I'm going to add this much to it. Or if you want to ship it to me, you got to pay me this fee. It's not good for the people at all. Most of the people that pay the tariffs internationally pay them, but the markup gets passed on to the consumer, in most cases anyway. So it's very disruptive to the population at large. It disrupts goodwill between countries where we used to get along really well, but now that you're doing this to us, and you can make up a corny example, but okay, I'm all right with everything, but gold is exempt. Silver and gold are exempt. And all of a sudden Mexico says, silver's not exempt. We're going to do something about it. Well, wait, we thought you were our friends. We ship most of your biggest customers in the United States for automobiles. Why would you do that? Well, why would you do it? You started it, and on it goes. It's kind of a he said, she said. I don't want to go down that rabbit trail too far, Daryl, but I really want to point out that once this thing starts, and it has started, it's very difficult to unwind it. And you don't know the unintended consequences. So I think you're very smart to bring up the fact that everything starts with energy, which means oil, basically. And the subset of that is the mineral wealth. And if we don't have the mineral wealth and we're not getting the rare earth elements, guess what? That cell phone with the Gorilla Glass that doesn't break, or it's very hard to break, that's gone. Because the element, I forget which one it is, that's a rare earth, needs to be added to the glass to prevent it from shattering. So now you're going to put out an inferior product if you can't make Gorilla Glass. Corny example, but it's just an idea of what really, how dependent we are. I mean, all these windmills, we use rare earths, solar panels. I mean, there's a lot of things we take for granted that if we didn't get the flow from China and they really did cut it off, the effect wouldn't be immediate like the next day. It might affect the stocks the next day. But as far as affecting the man on the street, I'd say it'd be within 6 months or less.
Yeah. That was kind of one of my my concerns is I mean, media's calling it a trade war, however we want to look at it. But it's if we don't have the infrastructure or like even like for example, enriched uranium. I'm in one company, Centrus, no, Centrus, I think that's how you say it. But and they're like the one of the only ones, and I think what is it, uranium fuels? Like they're one of the only ones that can process these rare earth minerals within the United States. So just thinking about like even the onshoring and there's talk of like tariffs and protectionism. Like we don't have like we're capable of it, but I feel like we don't have the infrastructure to produce the things that we need, and then when we have conflict with other nations that are the big producers of the rare earths and such that are sending us the things that we need, like it can be very chaotic. And so I was kind of wondering if we're like putting the cart before the horse in that, in regards to that. And so those are just some of the things that I've been pondering on lately.
A very salient point I want to add on to it briefly. I haven't been on the national financial channels in a long time, and that's fine with me. But the last time I was on, Liz Clayton had me, and it was on rare earths, and there was a mine in California that's basically a moly mine with rare earths, and we're going over how important they were and whatever. And what I told her, she almost fell off her seat because all of their rare earths get shipped to China to be processed. And she goes, "What? They go to China to be processed?" I said, "Yes, ma'am, they do." She couldn't believe it, but you already said that. I'm just reiterating what you said. But we have, and then you look at, let's just drop back a little bit. So much of our drugs, our medicine comes from China. Think about that. Think about all the seniors like me. I mean, I need heart meds, okay? I'll say it in public. Most people know that know me. What happens if my heart medication gets cut off or whatever? Again, the unintended consequences of a trade war can be much more devastating than just trying to write what the true cost of goods are. The marketplace should determine what the true price of goods are. But anyway, back to you, Daryl.
Yeah, 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 definitely. So pivoting to silver, um, I know we have some silver bugs that watches this channel, and we've had silver pretty much. I mean, we had $35 silver earlier this year, and then it was recently at 34 and some change. And then gold sold off, silver sold off even more significantly. I think it went down about 20%, and gold had went down about 7%. And and now silver's kind of bounced back. Um, I'm kind of wondering, where are we at with silver? Like obviously gold moves first, and we've been seeing gold move for a number of years. And silver is higher than where it was, but it doesn't seem like it's breaking out of whatever range it's in, to go higher to like towards its all-time highs. I mean, because gold is like more than sort of surpassed its all-time highs by now.
Yeah, I'm actually getting a little more comfortable with it. I don't like it. I don't like this gold silver ratio of roughly 100 to 1. But, we hit the 30 handle and stayed there for quite some time. And then we got this sell off, as you mentioned. And gold and silver did get under 30, but not for very long. It's bounced back. It's 32 as we speak. It's up to a dollar today on Friday. And uh, I think that I think silver investors will be happy in the longer term. I still think that silver will outperform gold in this next leg up when it ends or by the time it ends. So right now, I've always advocated having both. Gold is outperforming. There's a gentleman in all our peer group. He speaks at the investment conferences such as myself and Roy Jordan Roy Byrne, and he did a chart about when gold breaks out and what silver does after a big move in gold. And what it basically shows is that silver catches up and then some. So right now we might see silver actually outperform gold from the 100-to-1 ratio down to, let's say, 50-to-1, which means in terms of profit, it would be twice as much profit in silver as there is in gold, if that were to occur. I think it will. I think that silver will be sought after for two things. The industrial demand isn't going to go away. It could be curtailed somewhat with the trade wars, but really there's so much solar going on, so much electronics. This AI thing, we're going to need more power. We're looking at, new sources of power. Batteries, there's nothing that's actually better than a silver zinc battery. So there's a lot of things that silver's favor on the industrial side. And then the safe haven side, even though silver isn't recognized as a safe haven to the level that gold is, it will be, because the words gold and silver are almost synonymous. I mean, in the Bible, whenever it talks about gold, silver's mentioned, and vice versa. In most cases, there's exceptions. But people will be priced out of the gold market. I mean, you look at my sister, she's sitting there, she sold her gold position. She might say, I need a hedge. I can't take this stock market falling anymore. And she sees silver's a better buy. So maybe she'll buy silver. So a lot of people in the late 70s, when silver and gold moved dramatically in a matter of a few months, we saw a lot of people late to the party that chose to buy silver rather than gold because they could afford it easier. And I think that will take place again. Where is that magic point where I'll rather buy silver than gold? Is it the gold silver ratio, or is it that, $3,200 an ounce gold? That's pretty tough. I've only got, $4,000 in my savings. I'm leery of the bank. I don't want it all in the bank. I'm going to take some out and put it in the precious metal. So I still am a believer, but I don't want to be overly optimistic. Quite frankly, I'm a little disappointed as a silver investor at this point in time, but as the old expression goes, it's not over till it's over.
Yeah, for sure. Yeah, for me, I had a lot of ounces of silver. I reduced them significantly. I still have my stack, but um, I have more. I mean, obviously, with the price of gold going up, my proportion of wealth is more in gold.
Mhm.
And I was kind of just thinking about even some of the prices, being like buying a, 1/10 ounce of gold or whatever, like the prices are pretty, I mean, compared to when I started buying them, at $180, $190, it's like, okay, well, am I comfortable to keep spending, buying gold? Like I feel like it's money and it's insurance for my money. So I kind of view it differently with my physical gold. But I can go get a silver ounce, at similar prices that I've been buying in the last few years. But gold, the price of gold, I mean, it's significantly higher than when I started buying it. And so I've kind of been thinking about that and have been transitioning back into like silver more than gold. But that's kind of been some things that I've been doing on my end.
All right, Daryl, give me some feedback. Can you see the screen?
Hmm.
Okay, this is a silver demand. It's called the low case. And this comes from Matt Watson. Matt is a independent metals analyst, and he goes a little bit beyond me. I mean, I do almost all the minerals on the periodic chart, but he does a fair amount of the exotics like iridium and rhodium and some of the platinum group metals that are hard to pronounce. Uh, Great guy, introduced to him by the Silver Institute. So this is his long-term study on silver. And you can see this red line here is the amount of mining and recycling. So that's the silver market from 2025 to 2050. So the next 25 years. And what you see here is that we've been in this deficit the last few years where we had to attack the above ground supply of silver in order to make supply and demand balance. The supply and demand has to balance every year. And if you haven't mined and recycled enough, Well, you take the stockpile that's above ground and you sell it and you balance out supply and demand. So what it actually shows is from about 2022, 2021 onward, we're in this huge supply deficit and we will have to use the above ground supply. So if you take these and you measure them, what you're going to find out is in the early years, it's about 200 million ounces. We have probably 2 billion ounces in above ground supply in commercial bar form, and that's really the silver market. We have to count, silver rounds and silver eagles, silver maples, silver bars. That's all silver, but it's not the commercial side of the market, which is really what this is talking about. So what we see is that if you go out in the later years, like 2050, I mean, that's like 600 million ounces of silver. But our mining is only a billion. So, I mean, these last 2 years at the very end here is, 1.2 billion ounces in that 2-year time frame of deficit that would have to be made up by above ground supply. Now, this is a projection. This is not guaranteed. And I think everything he does here is fairly conservative, except one that's conservative, but I disagree with. I'll get to in a minute. We look at the green, that's solar. So he doesn't have solar just continually increasing year over year. In fact, if you study this curve a little bit carefully, you'll see it actually starts to build, and it starts to taper off somewhat. You see automotive continues to increase. You see other industrial uses continues to increase, and jewelry stays the same. Silverware stays the same. Those are two, I think, accurate. But he also has investment demand, which is the physical silver in the gray or silver bars constant at a pretty small amount. That's where I disagree with him. I think that as we go forward, the safe haven status of silver will see more and more investment come into silver. And if that were the case, that would be met by, again, above ground supply. So we could be pushing toward running out of silver. We never will, but we could be pushing toward eating up that stockpile much more rapidly in these early years as we get a push into silver as a safe haven. So if you're your daughter's ages, and you've got a 25-year time frame, it might be a good habit to get that piggy bank and start sticking it full of silver coins instead of printed pieces of paper. Because in the long term, if this is correct, it looks like silver is really going to have more and more price pressure as time marches forward. Now, I have to say one more thing about this, and I thought about it last night when I was thinking about our interview. This projection is what I just told you, and I agree with it at this point in time. But being involved in silver as much as I have for as many years as I have, my predecessor, which very few people know because I'm pretty old these days, but going back when I was a young man in my 20s, the guy that was a silver guru was named Jerome Smith. And he made a very hard case for silver being $200 the ounce by 1990. And he wrote his book in 1980. So it was like he's given it like 10 years. But his idea was this red curve right here, that we were constant at the amount of mining and recycling forever. And it had been that way for 60 years. But once the ink dried on that book, a new technology came into the mining sector. Of that new technology, we went from the 320 million ounces. So this red line back in the 40s through 1980, actually in the 30s through 1980, was 320 million ounces on an annual basis. Now it's a billion. And he said it's going to keep doing that. Well, it didn't. The new technology took it up to 500 million ounces rather rapidly. And therefore, the supply-demand dynamics changed drastically. And $200 silver was not going to happen. So I want to give that caveat, Daryl, to be fair to your viewers, our viewers. But I don't see that happening this time, but I want to mention it because it could happen, and I'm always on the lookout for it.
Mm-hmm. Yeah. I mean, and thinking about a longer term time frame, I mean, 20 years, 25 years. I mean, even if you bought silver in the 90s, early 2000s, whenever you bought silver, and you experience the run up to, $65, however much it went, in the all-time highs, even if you experience that, you would still be significantly up on your position now. I mean, and that's
Would be.
over a 20-25 year time frame.
Right.
And so I mean, it's important it just shows the importance of whenever things are low, things of value are low, it's important to buy and hold them for the long term. And then, when they're higher, like you've weathered even if you didn't sell at the
Yeah.
top in the last cycle, I mean, you're still up significantly.
Well, I've called the tops. I mean, I'm not a one-way guy, even though some people accuse me of that. I called the top at 21. I called the top at 48. And I did recommend to my readers in the public that they might consider taking some profits. And, that's on the record. That's well established. So, hopefully I can catch the next top. The problem with the next top, in my view, at this point in time, Daryl, is that where do you go? Do you
Hmm.
go to the stock market? Well, if it's down a lot, maybe you do. Where do you go? Real estate? Well, if it's down, maybe. If there are things that are undervalued, then obviously you could, swap your silver and move it into another asset class. And that's what we plan to do. But it may be a tougher call if there's really a big currency war going on and there's a shift in the banking system. I mean, there could be a lot, but I don't want to get out too far ahead of myself. It's just that it's going to be very difficult to call the top. I don't know if I'll get it. I'm not saying I can. I hope to get close to it. But when I call the top, I think this next time I will get probably more hate email than I've ever got. When I called the top in in 2011, some of my peer group gave me some pretty nasty emails about you're going to lose your reputation, you'll never be able to show your face again. Silver's going to 100. You're going to look like an absolute fool as your friend. You better take back that statement. You're going to really, and I got it right, and not that I'm going to get it right the next time, but I'm a man of my own, and I make my own decisions, and I've got a lot of experience, and and nothing grows in the middle, you know,
Yeah, yeah.
but it will be hard because I think this time it's going to be fear that will be driving the market, and that's a very strong emotion. So
Hmm.
if you're fearful that money's becoming worth less and worth less and going to be worthless, and now you've bought your gold and you bought your silver and you paid a pretty high price for it because you got in late. It's going to be hard to shake it from your hands because now you've got something that's proven to be trustworthy. And now somebody says, okay, it's overvalued. It should be sold because it's too high priced. That will be hard. People will be fearful and they won't want to give it up because they'll hold on to it kind of as a security system.
Hmm. Yeah, yeah, yeah. And it's important to look at things objectively as possible. I think um, there are some folks in this metal space that sell a lot of fear and everything, but we do have to have some reason some reason in there to try to balance out some of that fear. And I know that fear can drive like the markets especially like gold and silver really high. But at the same time, you want to be able to balance that out with having an objective view that this may not it nothing goes straight up forever unless we're experiencing something that's new, some new paradigm or whatever the case. Nothing tends to go up forever in a straight line, and so you're going to have some pullbacks. You're going to have uh, some sell-offs and sentiment changes and everything. And so, I think that, it's important to factor all of that in.
Totally.
Yeah.
Absolutely. You're correct.
Well, Dave, appreciate you for coming back on the show and everything. I want to link to your website in the chat below. What are some ways people can connect with you and connect with some of your work?
Yeah, the easy way is just type in David Morgan Silver in a search engine. It'll pop up a bunch of stuff. But if I could be so bold, I've been working on a documentary about silver. Actually, the monetary system is much bigger than silver. Let me restate that. The monetary system. And its subtitle is really the fear and control that money exerts over our lives and how to overcome that. Because if you go to a search engine, type in what's the number one stressor for people worldwide, something like 80, 85%, it's fear of their financial well-being. They're concerned about if they've got enough money, they're going to make enough money, if they're going to lose their job and all that. So it looks at money, Daryl, from kind of a spiritual side. Are we really evaluating this? Is this the way we really want to look at each other? Is how much money we can make with profit only, and kind of stuff we talked off air before we started recording. And so that's what the film dives into. And it also looks at energy and how important energy is in our lives. And what if there were other energy sources that were practically free and available for everybody, and we wouldn't have to worry so much about cost of gasoline or cost of electricity or the cost of heating our homes or cooling them off or whatever. So we explore some of these ideas. So the documentary's trailers can be looked at silversunrise.tv. At silversunrise.tv. Jib Griffin from Creature from Duck Island is in the movie. Foster Gamble from the Thrive series, Thrive 1 and 2 is in the movie. Ellen Brown has written several books, one called Web of Debt. She's in the movie. Myself, Mark Passio, that teaches natural law. So it's, it's a passion of mine to try to educate more people about where we are, but not to fear where we're going.
Yeah, and you got Ron Paul in there.
Ron Paul.
Now. Yeah. This looks amazing. So I see we have the trailers. Is there a date when you expect this to be?
Well, I just got the rough draft 2 days ago. I haven't actually watched the whole thing yet, but I would guess it's March. I'd say by the end of June we should have it out for everybody.
Okay, awesome. Well, yeah, appreciate that. I'm gonna go check out those trailers. That sounds like a very, very interesting and valuable documentary. So you all be sure to go to silversunrise.tv and then look up the Morgan Report, and I'll link to those in the description below. So thank you again, David, for coming on. I appreciate your time.
My pleasure. Thank you.